Hi everyone, I'm here with Ollie Williams, who's the head of repository and derivative services at DTCC at their regional headquarters in Singapore, to talk about the future of trade reporting regulation in Asia. Thanks so much for having us here, Ollie.
You're welcome, and it's great to see you again, Garima.
Can you talk a little bit about the evolution of trade reporting regulation and the role that Asia is going to play in this evolution?
Sure. I think to start, as we've discussed before, Asia was originally an early adopter around trade reporting. It's been here for quite a while now. Over time, the regulators have adopted more of a fast follower approach. So we're very much looking at what's happening globally and evolving the regulation here in Asia based on that. Globally, we've seen a real divergence between the different jurisdictions to the point where we're in a situation today where the data is largely unharmonised across the globe. The ability to share data as a result is relatively low. What we report here in Asia is very different to what is reported in North America, for example. I think the direction that we're seeing, though, is more towards a harmonisation. A good example of this is the CDE, or the critical data elements, that's come out of the work that the CPMI IOSCO is doing. We will see regulators adopt this approach. We're already seeing the CFTC talking about this publicly. We expect that this is probably going to take the same sort of form in Asia. As regulation evolves, the CDE will become critical to that evolution. Where's that going to lead us to? Well, I think it's going to get us to the point where things like MOUs, which exist today, are going to become more prevalent, and that's going to allow for more data sharing. The other thing I think we're seeing, and Asia is taking a really a leadership role in this, I believe, is collaboration between regulators. We're seeing good examples of that in Asia with things like the UTI. The adoption of UTI is something that the regulators are discussing together in Asia to make sure the approach is harmonised in the region, which will be good for industry, I think.
So can you give us some thoughts about global regulation like SFTR and what that'll mean for firms in Asia?
Absolutely. SFTR, as we've discussed before, is a European regulation, but it's going to have an impact out here. A little bit like MiFID, there are firms in Asia who are going to have to report under that requirement. We're going to see those firms, I think, adopting existing relationships they have and services they're using today in the OTC space. I think the other thing we need to think about for Asia with SFTR is, will we see similar regulation out here? We've seen things similar to SFTR go live in Asia before. Japan and the Bank of Japan particularly has requirements that are very similar. But I would also argue that we could potentially see this type of regulation become a focus for places like Australia, which have a very active repo market. We'd also have to think about Hong Kong with its very big equity space, whether or not the securities lending market there would potentially come into scope for a similar sort of regulation.
All right. And how do we leverage the trade reporting data for future regulatory reform or any other challenges that we might face in the future?
I think the first thing we should ask is why? Why would we think to leverage trade reporting? And the way we look at it is that industry has spent a lot of time and a lot of money, as have we and other trade repositories, on building a very large data set. We're holding a lot of OTC data information in our repository today. The question we're asking ourselves is, what can we do to help industry further by using some of the information we're holding on behalf of industry? So the question is, can we give this back to industry to use for other regulations or other purposes? There are some good use cases showing themselves already, and one would be the FRTB, or the Fundamental Review of the Trading Book, which is a concept that's coming out of the Basel standards. Within the FRTB, we talk about non-modelable risk factors. There is an idea that the information that's sitting in the trade repositories that is being collected for OTC derivative reporting could potentially be used to help model some of those risk factors. And this is not just an idea. We're actually in pilot today using aggregated anonymised data that firms have given us and giving it back to the firms to be able to use for their non-modelable risk factor calculations. I don't think it'll stop there. I think there'll be other examples. We have to think about things like reconciliation. Could there be uses of our data set in reconciliation, portfolio rec, for example? Also risk calculations. What other risk calculations out there could use a golden source, if you like, which is what we think we're sitting on. And I think past that, other data analytics type tools could potentially benefit from the sort of information we have. The key for me is that we need to understand who owns this data. It's owned by the industry. They're giving the data to us to meet a requirement. We need to ask, what can we do with that to help industry, and remembering that the data belongs to the industry.